Should we be pessimistic or rather optimistic? Very often that question is answered simply by looking at the time horizon. Most people will agree that Bitcoin very likely 20 years from now will have a higher US dollar valuation than it does have today, because the US money base is expanding. Grows by roughly 6.8% per annum, and simply because of that debasement of the US dollar, things that are relatively hard in its supply, like Bitcoin, should go up. Now, when it's just about those very long-term time frames, things are pretty clear. But when it's about the shorter to medium-term time frame, it's not necessarily that obvious. Here's an approach that I've shared multiple times on this channel, the 44-day simple moving average. Now, this is a rather short-term approach, and I do understand how some viewers here might see how my opinion might be flip-flopping when I was very bearish in the middle of October of last year and then suddenly turned bullish again. Now, this is only one of two useful approaches. The line here in turquoise, the 125-day simple moving average, also works well. And this is why the current situation is so tricky. We are bullish according to one approach that worked very well and bearish according to another one that also worked pretty well. Now, I'm going to explain the difference between those two approaches in a second. Because we followed that moving average, we've been able to make some money, while the vast majority of market participants lost almost a quarter of their capital just investing in Bitcoin, right? Most altcoins went down much more since we started this copy trading pool. So following the trend does make sense, but it's not just over the last few weeks. That's just where we opened this pool. When we look at the back test, this worked for years. So what we see here on the x-axis, that's the moving average duration. What we see on the y-axis, that's the annualized performance. Buying and holding would have given us this line here in black. And because the 44-day simple moving average worked the best, that's why we use that approach in the copy trading pool, but also why I apparently flip-flop so often. Now, this chart here is based on an optimization of leverage for both the long side and the short side, because there is actually a way to enhance the performance by going a bit more long whenever we are above and going a bit more short when we are below. So that optimization is shown over here. The x-axis is the leverage, the y-axis is the annualized performance, but without any leverage, we get this chart here. Now, it's not the 44-day simple moving average anymore that's the best. It's the 125-day simple moving average. Without any leverage, if we don't want to trade actively, and this is the return using the 44-day SMA, this is the return using the 125. So 125 is slightly higher, and it might even be a bit less volatile. And so that's why we don't just want to look at the 44-day, but if you want to be a bit less active, we can use the line in turquoise as well. It performs even better when we do not use leverage. Currently, the 125-day SMA is at $102,000. When we cross that moving average, things would become much more bullish. Now, the situation is somewhat tricky, because have a look at what happened in the past at the end of a bull market. We went below both moving averages, and then we got quite a lot of bad signals around the 44-day SMA. And then we even got a failed signal from the 125-day simple moving average. So even that longer term moving average can have its bad signals. And that's why we do all of that statistical analysis to find out what at least tended to work the best. And in general, following an SMA strategy tends to do much better than not doing so, than just buying and holding. If you're getting value out of this content so far, then feel free to give this a like. You can also subscribe because I publish videos regularly. Of course, any support is very much appreciated. It will help the channel grow. And it's not just the performance that's better, it's also the volatility that's lower. And so personally, I'm just reserved. If we do go above this line in turquoise, this would of course be bullish. But on top of that, I also want to see money flowing into the system again from traditional finance. So I want to see people depositing the hard-earned fiat currency into, say, a centralized exchange. The centralized exchange then sends it over to a stablecoin custodian. Custodian then issues stablecoins on chain. We can see that stablecoin issuance in charts, and that's over here. And unfortunately, we have not seen a lot of inflows from traditional finance in the last 2 to 3 months. And usually during a bull market, we tend to see much quicker inflows. Of course, sometimes you also have outflows, right? This was the Terra Luna collapse. This was FTX. And since October of 2023, we are expanding again. But that expansion has slowed down quite massively in the last months. There is a lot of capital on the sidelines though. Enough stable coins that if those were to get deployed, we might even hit new all-time highs. This is the stablecoin dominance, and at the bottom we see the crypto market cap. Whenever the stablecoin dominance is low, that means the market is very much risk on. There's not a lot of dry powder on the side. Whenever the stablecoin dominance is high, there's a lot of money that's not actively deployed. And so while the stablecoin creation and redemption has an impact on the overall long-term price movements, this at the bottom is Bitcoin, the shorter-term price movements are more dependent on the mood of the day. If the market is currently scared or rather very excited. And currently the market still is very scared. So we don't necessarily need to see that many new inflows. If there's just a positive narrative again and the capital that we already have gets deployed again, then Bitcoin or crypto as a whole can reach new all-time highs. There are first positive signs. For example, the long-term holders are not selling anymore. They started selling very aggressively once Bitcoin hit 115K. Now they've stopped their selling. And this might be one of the reasons why we've been able to go above that 44-day SMA again. I do not expect the long-term holders to suddenly start selling again because they've already taken quite a bit of profit in the last months. But the central question is, what's going to be the positive narrative? What's going to excite the current investors in crypto to buy into crypto again and to not be afraid of the 4-year cycles, for example? Because if we were to enter a bear market, then the drops can easily be 60, 70, potentially even 80% from the all-time high. And then the stablecoin dominance might not just peak at 10%, but it might go all the way up to 16%. This is when the market is exhausted, when prices historically tended to be extremely cheap. So it's really just a matter of the time horizon. Very long term, over the next 20 years, Bitcoin will be higher. Will it be higher in the next few weeks? Potentially, if the market gets bullish, if there's some kind of narrative. What's going to happen over the next year? Only time will tell. We need to see new inflows from traditional finance again. And unfortunately, those inflows have stopped 2 to 3 months ago. If you want to join our copy trading to automatically trade whenever we cross the 44-day simple moving average, or if you want to learn more about the backtesting and potentially backtest other assets and find the best timing strategy for your favorite cryptocurrency, then feel free to check out the premium membership. It's down below, thebitcoinstrategy.com. A link to premium also pops up here on the screen. If it's the very first time here, feel free to also subscribe. A like would be very much appreciated as well. See you next time on YouTube or see you in premium. Cheers.